I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Bob Hoye, market historian and the strategic strategist for institutionaladvisors.com. Welcome to the show, Bob.
Yeah, good morning, Jim. It's Friday and always good to be with you and your listeners.
What do you think's happening with the markets this week?
Oh, what was it the great J.P. Morgan said when he was disembarking from a ship in New York Harbor, and reporters were always there to interview big personalities as they got off, and they asked him what the market was going to do, and he said, the market will continue to fluctuate, which is an aside. So we've got, today's an up day, but the rally that came out of the serious problems in January became pretty vigorous. We thought the rally would be, the key parts of the rally would be base metal prices recovering on seasonal reasons, and crude oil set a seasonal low in January at low was 26, and we thought it would recover out to the spring on just rebounding out of a terrible trashing and up to a seasonal high somewhere out here. So we think we're pretty close to it. May can often see a high for crude oil prices. And you had, on top of when there might be seasonal strength, it was added to by unseasonal weather in northern Alberta with the dry and warm, causing severe forest fires, which of course is impeding production from the oil sands. So things are lining up for an important top for crude here. You got momentum and everything else, so we'll just watch and wait for it to roll over. The base metals have already rolled over. They had their sunshine and are slipping here. Copper is almost back to the lows of earlier in the year, 205. So, it's interesting. The dollar index, people were very concerned about that a few weeks ago. It looked like it was breaking down, but it did a little false breakdown. And then no follow-through. So we looked at that, wrote it up, and then looked back in January when, with energy prices and base metal prices under a lot of pressure, the U.S. dollar was up, and it had made a little breakout with no follow-through, so it turned out to be a false one. So it's interesting that both ends of the swing had a similar but opposite patterns. So the dollar index has been firming up. This is helping put the hot commodities down. And some of them are hot, like iron ore. Just incredible short covering in there. Of course, that price is a lot of influence by Asia, China interest, and they, going back when it was up and in the bull market, there was a lot of positioning in it. People that couldn't get the loans they wanted out of the loan market, I think it had something to do with collateral, were then positioning in iron ore and copper and then pledging that stuff as the collateral for loans. So it got pretty complicated. But nonetheless, it came apart and had the wipeout into January and a very good recovery. Base metal mining stocks did well. The oil patch stocks did well. And you even had some of the other ones, the financial stocks like the banks had a nice recovery. The broker-dealers had a nice recovery, but all of these seem to be stalling out in here now. The other one that was part of the seasonal move would, of course, be the lower-grade bonds. Junk suddenly discovered a bid and moved up nicely and has become overbought, starting to falter. There's also kind of in here, going into June, you can have narrowing credit spreads, which is the difference between high-grade and low-grade bonds. And we've had that on because with the pressures into January, spreads really widened because I think it was something like about 18% of all junk bonds done in 2014 were done in the oil patch. So it's quite a dominance there. So anyways, the junk bond has had a rally and outperforming long treasuries. So you've had a narrowing of spreads, and they're still actually narrowing. Looking at a couple of ETFs, you can sort of say there hasn't been much change in the last few trading days. And but we're into the time that when spreads are narrowing and narrowing with some enthusiasm, you can get the reversal, and somewhere, let's sort of say 4 or 5 weeks window in here, somewhere within there, spreads will reverse to widening, and part of that would be, or part of the influence with that would be weakening commodity prices, which have weakened a little already. But I would think here, Jim, that the crude oil would be the main one to watch for it to roll over.
What about the impact of the Fort Mac fires on the Canadian oil market? What's the factor there?
Well, you've got, first of all, the very weak pricing in Canada for crude oil, and particularly the unique kind of crude that the tar sands, oil sands produce. You've got a political zoo going on where the good of the country would be to export the oil, but you have very powerful political interests that at the moment they don't like the idea of putting in pipelines. Now, you should take a look at the map of North America pipelines. I think there's 2.5 million miles of existing pipeline. So, and they're all upset about doing another pipeline in BC. They're even upset about having a pipeline. Of course, Obama ended the idea of the Keystone Pipeline south in the States. And you've got some curious things going on here whereby the people in eastern Canada would sooner buy their crude where they have been getting it from Venezuela, which is a communist country, authoritarian and literally falling apart. They'd sooner buy crude from there than from Alberta. I mean, it's strange. Here's the other thing, is the same thing. Had the Keystone Pipeline gone through, more of Alberta-type crude would be sent down to the refineries in the Gulf of Mexico, which are set up to refine heavy crude. Instead, they're getting it from Venezuela and other places. So there's a certain madness to the intense political movements out there that just don't make sense at all. But at any rate, the Alberta situation has been exacerbated by an unusually severe and prolonged fire. I think I heard a weather forecast today that there will be some increase in cloudiness and some increase in humidity, but it's not very good. It's shutting down production in an industry that was suffering weak prices anyways, and then suffering political fallout from a bunch of very ambitious, politically driven people. It's sad to see, but somewhere the political process can cleanse itself. I think people can get some common sense at some time. But what we want to do is look at the precious metal side, which became very beat up going into November, December, and our research in November looked at things and said that there was a potential that the bottoming process, which could go into January, but the potential to be a cyclical bottom for the precious metal sector. And then you had the gold mining stocks beginning to outperform bullion, which was important, and you also had silver beginning to outperform gold, so that was also helpful. And then wham, we had a terrific rally. The Hoye went from a low of 99 right up to 230 in that range, and it was 130% gain, which is fabulous. Became overbought, and it's being held up here largely by the interest at the moment in crude oil. So a little weakness in crude oil will put a fair amount of weakness into the precious metals. The silver-gold ratio, as we know, in any rally for precious metals, silver will outperform gold. And we watched the momentum on the silver-gold ratio, and the daily RSI on that got up to 80 on a closing basis. And anything sort of a momentum above 78 is a sign of speculation, which will be corrected. So that's what we're looking for in the precious metal sector, a correction. Not at the moment, we can't sort of determine just how far it will correct, but it's kind of like in 2001, in that bear market, all of a sudden you had a huge, sharp rally in gold stocks, similar to the one we've had. Then the the rest of the bear market for the big New York Stock Exchange then went on down, so it knocked the gold shares down. So this is what we got here now. I think the next leg down for the general stock market is sort of about to start, and it'll be strong headwinds for the gold stocks, which are overbought. So correction for gold stocks. But on the base metal side and on the crude oil prices and the oil patch stocks, they may get down perhaps almost to the lows we saw in January. It's hard to determine right at this moment, but the point to get across is that the precious metal sector can have a correction. The maybe base metals and the oil patch can go right down and test those lows or get close to them. So I wouldn't be a long-term investor in these circumstances.
Or perhaps long-term for gold, but not right now.
Not right now, yeah. We only have a long-term view on that one, on any of these things, is when they're going up. And we're in a volatile world. And even though many of us don't wish to be traders, you really have to act on the overbought and the oversold. When it's really enthusiastic, you got to take some money off the table, and then you want to put it back to work when it's all very dismal. Unfortunately, we do have tested technical measures for determining the degree of upside speculation or going the other way, downside speculation. So, you have to employ the money rather than park it.
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, what about food commodities? What's the projection there?
Oh, yeah. They've here in Canada, with the formerly weaker dollar in winter, and then a drought in California, and not things you've had some increases in basic foods and stuff like that. I don't think that's going to be too long lasting. We're into changing from an El Nino to a La Nino. That may change the amount of precip that California's been getting. And the problem is, if we get commodities going down, that's general industrial type commodities and grains and stuff like that, the Canadian dollar is going to go down. So Canadian taxpayers won't have too much of a break there, consumers I should say. But yeah, I heard some numbers the other day about the increase in some of the food prices, groceries and stuff like that, both in Canada and the U.S. are up. But again, if you get the basic commodities like oil, base metals, and the grains heading down again, that will knock down some of the weather problems for, vegetable type of commodities. So, no, I don't see it running too much further on those items.
What do you think about Saudi Arabia handing out IOUs right now for the bills they owe?
Bureaucrats are crazy. I don't know. The whole world is in a lot of pain. The governments have taken on the obligation to provide a never-ending prosperity. Any recessions that would clean out bad business are not permitted. Interest rates are repressed, and that is reducing the income that fixed income people should be getting, retired people, and it's a horror show for actuarial life insurance and various casualty companies. There's no returns, and so the idea of repressing interest rates, if it had been done briefly and if it had resulted in a stronger economy, which was the thesis, it didn't happen. But then the authorities did not get off of the idea of repressing interest rates with the hope that somewhere it'll hook up. But the problem goes back to the start of that, is they got this idea that if you ease credit, it pushes business activity. But if you look back in the business cycle for a few hundred years, one realizes that, yes, on a business expansion, credit expands, but one doesn't cause the other. It's an activity. But these guys have been very foolish at the central banks in thinking that if they stimulate credit, it'll stimulate business, and this is now proving that it doesn't work. So what happens when the growth rates in the U.S., GDP and that sort of stuff, really get weaker? Then the theories will have been seen to have been completely hopeless. And I think the taxpayer is going to figure it out and say, hey, look, you guys had this theory that you could create prosperity by, risking our money in financial instruments. And no, I think there's a political uprising going on now in the United States, and it's choosing a new type of political figure in Trump, and this is sort of breakaway type of political activity. And I think this political movement, this uprising, will go on and look at other institutions of the left, such as central banking and what they've been doing. It's really exciting times. Let's put it this way, Jim. It's exciting times to be in the financial market in looking at history like the last 300 years. Now, in the political markets, this is really exciting stuff because it's a major change from 100 years of the same old government intrusion. So it's a good time to be upright and observant on this, and I'm glad that I'm still upright. So.
Well, one of my analysts that I talked to recently, I said, what do you think of Trump? And he said, well, I like his foreign policy of withdrawing American troops and bringing them home, but he said he's against free trade agreements and he wants to build a wall with Mexico. And he said, that's insanity. Free trade does work.
Yeah, but the wall is
symbolic,
part metaphor.
Yes.
What he wants to do is do what the government should be doing, which is to make sure that the only people who come in are legal. What's wrong with the government acting legally? But of course, the reason why there's so many illegals coming in is because the White House is encouraging it, because the Democrats want to have a built-in permanent majority, so they're bringing in people that would likely vote for the Democrats. And of course, we know that in Canada that was the case. Remember in the 80s going to a luncheon, and it was speaker was a recently retired then deputy minister in the immigration department, and he would say, here's the law, this is how the federal government is breaking the law, this is the law, this is how it's being broken. And the reason was, of course, that was the time when the Liberals prevailed, and it was to profile people coming in that would likely vote Liberal. So they were changing the country in order to stay in power. And of course, this is what they've been doing with bringing in so many Syrians rather quickly, probably without a careful scrutiny going on. And of course, this is where in the States, they're bringing in, allowing so many to come in from the South, it is to bring in so you can have a one-party system, always Democrat, and always hopefully with enough voters. So this is why the political game in the U.S. now is so fascinating, is because there's a popular movement against this practice, which has been going on for a long time. The U.S., of course, and Canada were originally all great countries for immigrants to come into. But you had a process to bring them in at a regular pace and to make sure they're all vetted. And this is all that Trump wants to do, is get the government back to acting on their own laws regarding immigration.
And Bob, before we go, we have a listener question. Bob, would you agree that China is already giving helicopter money to its citizens so they can go out and buy real estate all over the world? Is there an example of this happening in history? And are we selling Vancouver for a tulip?
That is really a good question. I like the idea that putting the two together about helicoptering money out to Chinese citizens so they can go out and buy real estate all around the world. It's an example of official madness, of course. Helicopter money, no, but the closest to that would have been pure and utter currency printing, such as in the Weimar inflation in 1921, 22, and 23, where they really were going around with wheelbarrows full of money. That can only be done in a country that doesn't have any credit market. And Germany in the early 20s really had very little in the way of credit market. So it was then a fully print currency situation. Whereas, say, the United States, where the gold bugs think that they can somehow the U.S. dollar is going to go to zero suddenly, you have to break the credit markets before they can actually get to what they fear, which is printing. So, no, this is pretty extraordinary times. But again, for a central bank to be successful at extending its portion of credit, they have to have a willing bidder of assets. So asset prices have to be going up, so that the street is borrowing money and they're there to provide everything they can. But the case that we're looking at is that if enough asset prices are weak, then, and let's talk this case, the Fed will be unable to get the credit out the door. And this then the old saying from the 30s was pushing on a string. And I believe that that can happen when enough asset prices are going down. It'll deny central bankers around the world the ability to get their portion of the credit spectrum out. So it was a good question. And is Vancouver a tulip bubble? Yeah, I think so. With a mania of people with newfound money in Asia coming in and buying indiscriminately. So it'll be fascinating to watch where it goes. Thanks for the question.
Well, yes, we saw an example of a mansion in Vancouver selling for over $31 million, and the person who bought it listed their occupation as student.
Yeah, and then borrows something like $9 million on a mortgage.
Bob, thank you very much for chatting with us.
Good to be with you, Jim, and next week.
Our guest has been Bob Hoye, market historian and the chief strategic strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. If you have any questions for Bob, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.